Hi guys, I welcome you in this wonderful video. So there is something interesting that I want to address when it comes to price action and time frames, because you can analyze the market here. Let's say you can analyze it here on the 4-hour, and immediately when you change, let's say you shift the time frame, the market changes and becomes something else. So I'm just gonna explaining how to actually combine time frames and use them to your advantage so that they will increase your accuracy as a trader. So let's go back to the hard time frame. So here I am on the 4-hour, and as you can see on the 4-hour, there are just few things that we can pick up. At the moment, you can see that okay, the price is going up, and at this point in time, it seems like it is on a high point, or it is on some kind of a resistance level. Why? Because we can see that we're the high and the next high, and the price is around there. So it seems like the price is getting stuck over there, not just over there, but it is as well responding to that previous high, because you can see that it is around that area. So as I'm establishing these conclusions, see that I'm establishing them on a hard time frame. Let's say you are just a day trader. At this case, I'm opening the 4-hour and I'm establishing these conclusions on my hard time frame. So when I'm drawing these conclusions, there is one thing that I have to make sure that I do is that in every time frame that I open now, which is lower than this time frame, should never ever go against these conclusions that I'm drawing right now. Meaning, if I change the time frame and go to the 1-hour, I should go to back or to assist these conclusions that I've drawn right now, that okay, price is at the moment on its highest point or in a resistance level. And when price is on its highest point, there is one thing that we're looking for. We're looking for a possible downward move. So there shouldn't be anything that entice me to go long. So what I should do now is that okay, let's say I go to the 1-hour, and on the 1-hour, it is clearly obvious that it is indeed on a high level. But now, do you see that the resistance is no longer that of the trend? Because remember, on the hard time frame, we even pointed this, but now we no longer point this. The only thing that we point, it is just these two recent highs, here and here. Now we no longer care about everything else, because the time frame took care of everything else. The time frame gave us two things. It gave us the resistance, which is a level, and then it gave us the direction, which is the trend. So we're able to establish the key level, and we're able to establish the trend that okay, initially the market has been moving up. So because it is stuck on a resistance, this might mean that it is a reversal. So one mistake that I should avoid as a trader at this point in time, it is making sure that I avoid the temptation that will come when price approaches this level. Because when you look at it in this picture, you'll be tempted to say, okay, price approaching support, I'm gonna be trading this as a range. So now on the lower time frame, you're gonna see this as a range. However, this is not a range at all, because your higher time frame doesn't signal this as a range. It tells you that this is just a high point, and price is at the moment taking it is posing at the highest point, and it might reverse at any time. This will be a range only to guys who will be trading only, maybe who will trade the 1-hour as their highest time frame. Then they will perceive this as a range, and they will make decisions which are based on a ranging approach, and then maybe in the near future they will face the consequences of the reversal that is likely to come. However, even you, when you're trading on a 4-hour, you might not see what a weekly time frame trader is seeing, but it's fine. What matters here is that every trader should stick on his time frame that he is using. He shouldn't allow any other time frame to change his decision or to convince him otherwise. So what you should look for here, because you've established a conclusion on a high time frame that we are on a range and we are expecting a reversal, then these time frames, the 1-hour and maybe the 30 minutes, if you're using 3 time frame, they should aid you in finding the right time to enter. And when I'm talking about the right time to enter, it is only on one side, which is on the seller side. You should be looking for selling opportunities, not buying opportunities. Why? Because you've already established that it's on some kind of a resistance on the higher time frame. And then one mistake again, or let me say another mistake that you have to avoid as a trader. It is the temptation of then setting your targets to a limited level. For an example, the traders will look for the selling opportunity. Let's say you find a selling opportunity here at the same highest point or at the highest possible point here. And then what traders will do, because they found their entry opportunity from a 30-minute perspective, they will then they will then begin to sell, and then as they sell, they're gonna set their targets to a very limited or narrow perspective. Here they will say that my target is here because this is obviously the next low point. However, you didn't analyze on the 4 hours so that you can have such a small target. Your target is not here. Let me just show you where your target will be. Because you analyze the market in the 4 hour initially, your target is all the way down here. So you see that you are losing all these potential profits that you might make if the market works on your favor, because this is signaling some kind of a reversal on what we have said earlier. So you shouldn't make the mistake of narrowing your targets to this very close level. Your targets as the 4 hour trader should be all the way down there. But what should you do in the case of a stop loss? Then your stop loss should be set relatively to a smaller time frame. This is the joy of using multiple time frames, guys. Your stop loss should be set relative to the smaller time frame, meaning your stop loss should be just above this high. What will this mean? Let me just show you. This will mean that you as a trader, you are risking only this amount of pips, or this amount of points to make this amount. So you see that if you make it, or if your trade becomes successful, do you see that you'll make almost times 10 of what you're gonna risk if the trade doesn't work? So make sure that you always look at the bigger picture first, establish the conclusions of where the market is likely to go, and then when you go to your time frames, to your smaller time frames, make sure that they are trying to give you a good entry point and maybe a stop loss level. Don't be don't allow your targets to be narrow, but it's good for your risk to be narrow, because we don't want to lose a lot. So it's good if your risk is narrow, that okay, I'm gonna put my stop loss there, but my take profit is not gonna be determined by this time frame. My take profit is gonna be determined by the 4 hour, and the 4 hour is telling me that it is likely that my take profit will be all the way down there. So this is how you should use time frames, guys. Don't allow the time frames to confuse you. They are not here to confuse you. They are here to enhance your analysis and make your decision making to be a little bit better and a little bit accurate. So I hope this is making sense, guys. You establish conclusions on the higher time frame that you prefer, and then on the smaller time frames you just try to get accurate entry points and a good stop loss level. I hope this is helpful, and thank you for watching this video.